Morning, everybody. It's Wednesday, February 19th, 5:26 a.m. Central Time. Grain markets are mixed to higher this morning. March corn futures up 1.25 at 5:03 1/4. March soybeans up 1.5 at 10:40. March Chicago wheat down 3/4 of a cent at 6:04. March Kansas City wheat down 1/4 cent at 6:27. March spring wheat up 1 3/4 at 6:42 3/4. The corn market had another big day yesterday. Let's start there.
So CME corn futures posted their best trade since October 2023 on Tuesday. The nearby March 25 contract was finally able to break out above the $5 per bushel mark. U.S. export sales remain a driving factor. Sales for the current marketing year are running 28% above last year's pace, while USDA has projected a year-over-year increase of only 7%. Continued upside momentum and tight U.S. and world balance sheets have kept the larger speculator interested. Private groups estimate that the funds were net buyers of 5,000 contracts and hold a real-time net long of 360,000 contracts. Also on Tuesday, wheat futures rose to their highest level since October, driven by Black Sea headlines and weather concerns in the U.S. and Russia. Soybean futures also closed higher on the day.
Let's talk about the corn market and the drastic shift in price action and sentiment that we've seen over the last few months. Spot month corn futures bottomed near $3.60 back in it was August or September of last year. We're trading 503 this morning. It's been a substantial shift. I threw some retracement lines on here. If you start with the 2022 high, 827, and draw it down to the 360 low from 2024, you've got some possible retracement targets around 538. The 50% retracement of that entire move would be about 594. So what has changed? Why is this thing rallying the way that it is? The general supply and demand situation, US, global, no matter how you slice it, it's tight. It's tight. You look at the US situation, 10.2% stocks to use ratio being projected, and I am very firmly of the opinion that the market is trading something even lower than that. Mackenzie mentioned the export piece, and I think USDA has got to come up with exports. We're running 28% above last year's pace in terms of sales, and USDA is projecting an increase of only 7%. I think they've got to come up, and I think that means that the trade is working with the stocks to use ratio number south of 10% into U.S. carryout number, probably south of 1.5 billion bushels, maybe even south of 1.4 billion bushels. You look at the world situation, it's also relatively tight at 23%, 23.6% stocks to use. You'd be the tightest since the 2013-2014 marketing year. Here's Brazil corn ending stocks to use ratio. Brazil's not big on ending stocks, but their stocks to use ratio is projected to be 2.1%. They don't do storage and carry over the way that we do in the United States, but still tight. I've seen this one floating around: world corn ending stocks to use ratio with China excluded. And oh my gosh, it's going to be the tightest in 20, 30 years. I don't know if this is fair or foul. I don't know how you make a balance sheet and exclude the world's second largest producer and also a big importer. But in any case, people throw this out there. So yeah, it's friendly across the board. The lone piece of bearish information I could probably show you would be like a Chinese ending stocks chart. And they've got a lot of corn in China, but it's not going anywhere. A lot of people think that the flip side to this, to all this bullish, friendly stuff, is that we're going to plant a ton of acres this spring, right? I would contend at this point that the corn market, the corn situation, the corn balance sheets, we need the acres. We need to buy the acres. I think the market's job right now is to ensure that U.S. farmers plant 94, 95, 96 million acres of corn. I think that's the market's job right now. And the way that it looks, that's probably where we're headed. So at the end of March or in June, when USDA prints a number like a 94 or a 95, I don't think that's a surprise. And I don't know that it has to be bearish. I think that's exactly what the market's going for right now. You look at the ratios, and more importantly, you look at farm budgets. That's exactly what they would tell you. So the corn market does have a very good story here, despite the idea that acreage is going to increase.
The Department of Government Efficiency is evaluating agricultural checkoff programs. Jim Wiesmeyer at Pro Farmer reported Tuesday that DOGE's review of USDA's 22 checkoff programs is part of a broader effort to cut federal spending. Although DOGE cannot directly change checkoff policies, its recommendations could shape future laws and regulations. The review could lead to a closer evaluation of the programs and possible restructuring. It could also result in regular producer voting to determine if the programs should continue. Checkoff programs, as we all know, are meant to help with marketing, research, and education, but they have been criticized for lacking transparency, fairness, and requiring mandatory participation.
Before we get into this, if you ever get a chance to talk to Jim Wiesmeyer, you should. He's one of the most interesting people I've ever met. He's been covering this sort of stuff in Washington for decades. But prior to that, I had dinner with him one time at a meeting. Prior to that, he was into, he did music for a while, and he interviewed like Jimi Hendrix and like Janis Joplin.
Oh,
He's also
sweet.
interviewed, I think, like every living U.S. president. In any case, to get to the checkoff stuff, I'm not an expert on this, and I don't really, it's not my place to comment on it because I don't pay checkoff dollars. I don't farm. Mackenzie, you do have a place to talk about this. You're a
Yes.
rancher. You pay checkoff dollars. Speak to me very plainly as a rancher and not as a representative of our tiny little podcast here. What are your feelings about this?
I think the beef checkoff particularly needs to be reformed. I guess you could say, I'm not saying it needs to be done away with, but there are a lot of funds that go into this program, and there's not a lot of transparency as to where the money goes. And I don't think there's enough data to say that it's doing enough for us ranchers for what we pay $1 per head. So yeah, I think it's great to see things being looked at. I'm not saying it needs to be done away with, but there definitely needs to be some changes.
Generally speaking, these checkoff programs, the big ones I think nationally are soybeans, pork, and beef. Corn is all state by state, as I understand it. The purpose of these is threefold, generally speaking: research and innovation, marketing and demand growth, and then education, farmer, rancher support, that sort of thing. I think that some people caught the wrong vibe when I talked about DOGE yesterday. I am a huge fan of all of this. I think that it's the whole thing about checks and balances and let's run through and audit everything. It's decades overdue. It's decades overdue. This is something that we need, and they probably do need to trim some fat. And whether it's checkoff dollars or just USDA in general or any of the government programs, I think it's fantastic that they're going through and reviewing everything. They're going to find some waste and some abuse, absolutely, and they're going to find some stuff that needs to stick around too. I'm very curious to hear what you guys think about the checkoff dollars, whether it's corn, soybeans, wheat, pork, whatever it is that you're paying into. Drop us some comments in YouTube here, guys.
The National Oilseed Processors Association released January crush data on Tuesday. The U.S. soybean crush declined last month, but was still the second largest on record for the month, with NOPA members processing 200.4 million bushels. The crush was down 3% from the all-time high set back in December, but up 7.9% compared to January 2024. The January crush missed the average trade estimate of 204.5 million bushels. End of month soybean oil stocks in January climbed to a 6-month high of 1.27 billion pounds. Stocks were up 3.1% from the end of December, but down 15.4% versus year ago stocks. Stocks were slightly below the average trade estimate of 1.29 billion pounds.
Okay, so we missed the mark just a little bit in terms of what was actually printed for the crush report and what was expected. But the U.S. is crushing more soybeans, and that's a trend that is absolutely going to continue. We're probably going to continue to lose export share as well. So it's necessary that we improve domestic demand. We're kind of waiting on biofuel news. You know, there's been some chatter about 45Z here and there, but we'd like to see some concrete action taken in that sort of step, so that we can ensure that we're using U.S. soybean oil for renewable diesel. I think some of the tariffs will help with that, but we'd like some more policy guidance. But in any case, when USDA issues its next marketing year balance sheet, the 25-26, which will be out in May, you're going to see an even higher projection for U.S. soybean crush in all likelihood.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Once every few weeks, we've been trying to do one of these like grain marketing for beginners type videos. Yesterday, we did futures versus HTAs. So in both instances, the farmer is able to set his futures price, but there's a lot of pros and cons to both. We had a cool graphic where I ran through and I said, okay, the farmer has the advantage or disadvantage with futures and then with HTAs, and had a list of different categories. This is really good stuff if you're just getting started with grain marketing, or maybe you're experienced, but you just need a refresher. I made a couple of our other videos on this same kind of topic available this morning. We had put options for beginners. We had re-ownership for beginners. And we're going to continue to do one of these every few weeks. So if you're just getting into grain marketing, or maybe you need a refresher, check out the premium stuff. You can go to standardgrain.com, sign up this morning. It's a $50 per month subscription. Cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. If you're seeking to simplify your grain marketing this year, this may be a decent place to start. I publish my cash grain marketing recommendations every single day at the bottom of the email. It's very, very easy to follow. Nothing overly complicated or complicated at all. Give that deal a shot this morning, guys.
President Trump plans to implement tariffs on automobile, semiconductor, and pharmaceutical imports. Trump said on Tuesday the tariffs would be roughly 25% and would greatly increase over the next year. Details regarding the tariffs are expected to be finalized by the beginning of April. Last year, the U.S. imported nearly 8 million vehicles, accounting for about half of all vehicle sales here in the nation. It's unclear if the tariffs would target specific countries or apply to all vehicle imports. Trump also didn't specify if cars imported under the USMCA free trade agreement would be exempt from the tariffs.
So as of right now, Trump's been in office for a little over a month. There has been no negative impact on our grain markets as far as tariffs are concerned. Corn futures have rallied. Soybean futures have backed off a little bit. I think that's on other things. Wheat futures have rallied. So until you see Mexico mention corn or China mention soybeans or one of those big things, I don't know that these things matter for the grain markets, not right now.
The European Union plans to ban crop imports treated with pesticides that Europe has prohibited. A draft of the policy is set to be released today with the goal of providing fairness for European farmers. The policy will ensure that some of the most dangerous pesticides banned in the EU for health and environmental concerns do not re-enter through imported crops. The move could potentially restrict imports of U.S. soybeans and other crops. According to President Trump, the restrictions would actually end up harming Europe.
In terms of what the U.S. exports to Europe, so is anything really at risk here? Current marketing year corn sales, the European Union accounts for 4% of U.S. corn sales. Wheat sales, it's about 3%. The European Union does account for 10% of U.S. soybean sales. So I suppose that there are some things here that could shift around. If they really go through with this and some of our crops are not eligible for import in the United States, or out of the United States, I think what you see is just a game of musical chairs. You probably see the EU go elsewhere. I don't know where they go. And then you'll see some other global buyers come here. It's a cool story, but I don't see this as being like a big impact on the U.S. export program one way or the other.
U.S. corn shipments were impressive last week, easily surpassing pre-report expectations. USDA reported that 63 million bushels of corn were inspected for export during the week ending February 13th. The print was up 19% compared to the previous week and up 53% versus the same week last year. Soybean shipments were disappointing, falling below expectations at 26 million bushels. The print was down 34% from the prior week and down 44% compared to the same week last year. Wheat shipments also came in below expectations at 9 million bushels. The print was down 56% from the previous week and down 41% versus the same week last year.
With regard to corn and soybeans, we're trending in the case of both crops in the way that we typically trend this time of year. Corn sales tend to tick up this time, or shipments rather tend to tick up this time of year. Soybean sale or shipments tend to tick down. We're a little bit ahead of where we probably would be normally with corn shipments. That's a very, very good seasonal print, 1.6. And that speaks to the idea, again, as I mentioned at the top of the show here, that USDA is too low with its export number for this current marketing year in corn. Soybeans are supposed to trail off. We are just not competitive on the export market. We're still going to ship some, but you're not going to be selling a whole lot more. We're going to start to see some new crop sales in soybeans sometime here during the next couple of months would be my guess. That would be normal. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 30 cents lower to 102 higher. Feeders saw gains ranging from 192 all the way up to 337. Box beef was mostly lower. Choice was up a mere 7 cents at 315.77. Select was down 252 at 303.71.
US dollar's up a little bit this morning. Stocks are off just a little bit. Gold's up $9. Crude oil's up about 70 cents. Have a great day, guys. We'll be back on Thursday.